Hi, I'm going to introduce Maybank, one of the top banking in Southeast Asia. Maybank provides many financial products and services such as saving and current account, fixed deposit, credit and debit card services. It also has Maybank Islamic in Malaysia. Maybank also have Maybank to you for digital banking for managing account and paying bill online. MAE application is for everyone to using e-wallet functionality and set budget limit for an amount. Maybank is a great case study for comprehending for the present and future because it has financial services, science, innovation, and social responsibility and regional influence to everyone. Maybank is famous in the public in our country, Malaysia. Next, I'm going to introduce CIMB Bank, Commons International Merchant Banker. CIMB have more than 1,000 branches in Asia such as Malaysia, Thailand, and Singapore. CIMB Bank provides products and services such as personal loans and home loans, auto loans, and education loans. For the digital banking side, CIMB Bank provides CIMB Clicks for a company for payment, online payment, and CIMB Bank on top for normal use such as e-wallet payment and setting. CIMB Bank also provide CIMB Bank Islamic in Malaysia. CIMB Bank focus on user convenience, digital payment, online transaction for financial principle. CIMB Bank is popular because it is focusing on digital transformation, particularly through the CIMB Bank on top apps and CIMB Bank CIMB Clips.
Good day, madam. Today, I will be presenting a financial ratio analysis for Maybank, comparing its performance in 2023 and 2024. Let's start with liquidity ratio. There's good news here. Maybank current ratio improved from 1.2 to 1.3, and the quick ratio increased from 1.01 to 1.08. This means the bank is in a stronger position to meet its short-term financial obligation. Simply put, it now manages its liquid asset more effectively and has more flexibility to handle short-term needs. Next, we look at activity and turnover. The asset turnover ratio rose slightly from 0.065 to 0.067. While the change is small, it still points to better efficiency in using asset to generate revenue. Since Maybank is a bank, other turnover ratio like inventory or receivable are not really relevant here. Now onto the debt ratio. The total debt ratio did increase slightly from 0.862 to 0.878, suggesting Maybank is using a bit more debt to finance its operation, but the debt to equity ratio actually decreased from 6.3 to 6, which is a good sign. It shows the bank is relying less on debt and improving its balance between borrow fund and equity. When it comes to profitability, things are looking even better. The net profit margin jumped from 18.91% to 21.82%, while tell us Maybank is managing its profile more efficiently. The return on asset went from 1.23% to 1.46%, and the return of equity increased from 9% to 10%. This improvement means the bank is making better use of its asset and providing stronger return to its shareholder. To wrap it up, Maybank shows solid improvement in 2024. It has stronger liquidity, higher profitability, and is generally using its resource more efficiently. Even though there was a slight increase in debt usage, it's balanced out by a better debt to equity ratio. So overall, we can say the Maybank is financially healthier and more efficient in 2024 compared to the previous year.
Hi, madam. My name is Tong Jun and I will carry on the 2.2 part financial ratios IMD. And the first I will talk about is the liquidity ratio. As shown in 2024, both its current ratio and quick ratio improved at 1.22 as compared to the 1.18 in 2033, creating a better liquidity standing in the short term and better financial health. Increase in the current ratio is a fact of improvement in the balance between current asset and current liability, which indicate low financial risk and possibility of setting obligation, rising stakeholder confidence. In the meantime, the quick ratio, which does not take into consideration the less liquid assets such as inventory prepared expenses, indicates the enhanced ability of the bank to cover immediate liabilities by using only highly liquid assets, giving a closer seal to the robustness in short-term operation. Moving forward is about the activities and turnover ratio. The asset turnover ratio of CIMB increases by a small percentage of 0.061 in 2033 to 0.063 in 2024, and the indicator showed that the bank improved its use of asset to generate revenue by a small margin and therefore by the improvement in the operation. And now it's about debit ratio. The total debt ratio of CIMB grew modestly in 2024 by 0.019 to 0.897, which placed it in a higher position of financial leverage and potential risk, but also open up a growth opportunity in case the borrowed funds are correctly exploited. And the debt to equity ratio improved by 0.2 as well, showing less dependence on debt's increased financial. Last but not least, which is a profitability ratio. So CIMB net profit margin improved from 18% in 2023 to 20.19% in 2024, reflecting a stronger cost efficiency and income performance. Its return on asset increased from 1.1 to 1.27%, indicate more effective asset utilization and operational efficiency, and its return on equity rose for 8.13% to 8.94%, demonstrating improved profitability, sound management, and increased value generation for shareholders. So that's all for my part 2, and I will hand over to the person start the part 3.
Now let's look at the liquidity ratio for Maybank and CIMB Bank in 2023 and 2024. First, the current ratio which shows how well a bank can pay its short-term debts. In 2023, Maybank was at 1.20 and CIMB Bank at 1.18. In 2024, both improved. Maybank to 1.30 and CIMB Bank to 1.22. This means both banks became more liquid, but Maybank is stronger overall. Next, the quick ratio, which is similar but ignore inventory, important for banks since they don't carry much inventory. Again, Maybank has a slightly higher ratio than CIMB Bank in both years. Both improved in 2024, with Maybank showing better and more stable liquidity. In short, both banks improved, but Maybank has the stronger liquidity position overall. Next, let's look at the activity ratio, starting with the asset turnover ratio. This ratio shows how efficiently a bank uses its assets to generate revenue. In 2023, Maybank recorded an asset turnover of 0.065, while CIMB Bank was slightly lower at the 0.061. In 2024, both banks improved. Maybank increased to 0.067 and CIMB Bank rise to 0.063. This small gain suggests better asset utilization, with bank consistently performing slightly better, indicating more efficient asset management. As for the other activity ratio, inventory turnover, receivable turnover, and payable turnover, the data was not available for either bank. This is common for financial institutions where inventory and typical receivable or payable are not major component of operation. In conclusion, based on asset turnover, Maybank showed a marginally stronger performance in utilizing its asset to generate income. Next, look at the debt ratio for Maybank and CIMB Bank in 2023 and 2024. Starting with the total debt ratio, this shows how much of a bank asset are financed by debt. In 2023, CIMB Bank ratio was slightly higher at 0.878 compared to Maybank 0.862, indicating CIMB Bank used more debt. In 2024, both banks increased their debt level, Maybank to 0.878 and CIMB Bank to 0.897. While this is common in bank, CIMB Bank show a higher reliance on debt, which could mean higher financial risk. Maybank maintains a more balanced capital structure. Next, the debt to equity ratio, compare debt with shareholder equity. CIMB Bank again have a higher ratio in both years, 6.50 in 2023 and 6.30 in 2024, while Maybank improved from 6.30 to 6.0. This decline reflects Maybank's effort to reduce leverage and improve financial stability. In summary, although both banks operate with higher debt level typical for the industry, Maybank show better control and financial responsibility than CIMB Bank. Now let's look at the profitability ratio. This measures how efficiently each bank turns income, asset, and equity into profit. In net profit margin, Maybank consistently outperformed CIMB Bank, rising from 18.91% to 21.82%, showing stronger profitability. In return on asset, Maybank again lead with 1.46% in 2024, meaning it generates more income per dollar of asset. For return on equity, Maybank grew from 9% to 10%, ahead of CIMB Bank 8.94%, reflecting stronger shareholder return. In all three profitability measures, Maybank performed better than CIMB Bank, making it the stronger and more efficient bank overall. Based on 2024 financial data, Maybank demonstrates strong financial performance in several areas. On the strength side, Maybank has a current ratio and quick ratio of 1.30, which indicate excellent short-term liquidity. This means the bank can comfortably cover its current liabilities even without relying on inventory. A good sign for a financial institution. Its asset turnover ratio of 0.067 reflects better use of asset to generate revenue compared to CIMB. Maybank also shows strong profitability. The net profit margin of 21.82% highlight effective cost control, while the return on asset 1.46% and return on equity 10% indicate efficient use of resources and solid return for shareholder. However, there are also some weaknesses to note. Maybank total debt ratio of 0.878 show a high level of debt users, which increase financial risk even though it's slightly lower than CMB. The debt to equity ratio at 6.0 also remain high. While it has improved from the previous years, it still reflects a heavy reliance on borrowed capital. In conclusion, while Maybank displays strong financial health and efficiency, it should continue working on reducing its debt to ensure long-term stability.
Good morning, madam. My name is Lim Cheng Nok. Now I will start my presentation. CIMB weakness and strength. So the first graph is a CIMB financial strength. So the CIMB strength first one is improving liquidity ratio. In 2023 year to 2024 year, create ratio increases 1.18 to 1.22 and quick ratio increase 1.18 to 1.22, suggests improvement of short-term financial strength and liquidity. So the next one strength is rather improvement in asset turnover ratio up to 0.063 2004 year or 0.061 2023 year is an indicator of a somewhat more effective use of resource to risk review. The next one strength is improving net profit margin goes by 80 to 20.19% 2023 year to 2024 year indicators that in the future profitability will increase. Next strength improving return on equity ROE goes of 8.13 to 8.94% suggests improving shareholder return after the year. Next strength of positive turn in return on asset ROA goes in the ratio of 1.10% to 1.23% indicators better utilization of fund in generating income. So we can do next to the CIMB Maybank financial ratio. So we can go there, can see the CIMB weakness. So the CIMB weakness first one is a lower liquidity compared to Maybank. Comparing with Maybank, CIMB always obtain benefit in create ratio and quick ratio, integrating that it is in relativity low position of short-term responsibility. The next one weakness, lower asset utilization. Typically, Maybank best CIMB in the asset turnover in each one of the year indicators that CIMB has outdone in the asset turnover generation of income. Next one weakness, low profitability than Maybank. All net profit margin, ROA and ROE are contained under Maybank. That they inhibit poor management of cost and generation of income balance, engineering, increase and asset. Next weakness, lower profitability than Maybank. All losses than the Maybank in terms of net profit margin and ROA and ROE are consistent growth, show poor control of cost and generation of revenue for it as compared to equity and asset. The next weakness, still less effective than Maybank in ROA. The ROA of Maybank is better at both years indicators that CIMB make less profit to the use of each dollar of each asset. So this the CIMB weakness and strength. So I have done my presentation part. Thank you, madam.
So for recap, key findings for liquidity position, both Maybank and CIMB showed improvement from 2023 to 2024, as seen in their higher current and quick ratios. However, Maybank clearly maintained a stronger liquidity profile in 2024 with a current ratio of 1.30 and a quick ratio of 1.08. CIMB, on the other hand, recorded both its current and quick ratios at 1.22. This means Maybank was slightly better at managing its short-term obligations, providing it with greater financial flexibility than CIMB. So for operational efficiency, both banks showed minor improvements in asset turnover ratios. Maybank increased its asset turnover from 0.065 to 0.067, while CIMB's went from 0.061 to 0.063. These are small gains, suggesting that the banks were able to generate slightly more revenue from their assets in 2024. But however, Both turnover ratios remain low, indicating room for improvement in how efficiently they use their assets. So looking at leverage, both banks remain highly leveraged with debt to equity ratios above 6.0. This is quite normal for banks, but it would be considered high in other industries. Between the two, banks appeared more cautious with a slightly better approach to managing its debt. This shows that Maybank is more conservative in its capital structure and likely better prepared to handle financial stress. So finally, for profitability, Maybank outperformed CIMB across all key profitability metrics in 2024. For example, Maybank recorded a higher net profit margin of 21.82%, while CIMB posted 20.19%. Maybank also achieved a return on equity of 10% compared to CIMB's 8.94%. This indicates that Maybank not only generate more profit, but also use its equity more effectively.
Hi madam, I'm Katrina Singhil and I'll be presenting my part, which is 4.1 recommendations for both Maybank and CIMB. And here I've listed 4 points for Maybank. Firstly, prioritize equity financing over debt. For example, Maybank could issue new shares to raise capital instead of taking on more loans, reducing interest and payment burdens. The second point is leveraging existing technology, investments to boost efficiency. So Maybank can actually use AI-powered risk assessment tools to speed up loan approval and improve asset turnovers. The third point is maintain strong liquidity, especially during economy volatility. For example, they can keep a higher proportion of liquid assets like the government bonds or cash reserve to cushion against the market shocks. Last but not least, we have avoid overexposure to leverage. So this means like you can set an internal cap on debt to equity ratio to prevent taking on excessive debt. Okay, now we will be moving on to CIMB Bank. The first point I have is enhance liquidity to reduce short-term risk exposure. For example, the bank can increase holding in short-term, take low-risk asset like treasury bills to ensure quick access to funds. And the second point is control costs to boost profit margins. The bank can implement automation in customer service. For example, use AI bot similar to Maybank to reduce the staff expenses without compromising service quality. The third point is to make prudent adjustments to the debt portfolio. They could refinance high interest loans with lower rate instruments to reduce interest, expenses, and financial risk. And the last point is maintain a strong capital adequacy ratio. For example, they could retain a portion of the earning instead of paying them all out as dividends to strengthen the bank capital buffer.
So in conclusion, overall, Maybank outperforms CIMB in most key financial areas, especially in liquidity, profitability, and efficiency. Maybank's current and quick ratios improved, showing stronger short-term financial health, and it also recorded better profit margins, return on assets, and return on equity, which point to a more profitable and well-managed business. While both banks remain highly leveraged, Maybank showed a slight better improvement in managing its debt, unlike CIMB, which still signals higher risk. So although both banks aim for long-term growth and sustainability, Maybank stands out as the stronger performer across the board. That's all. Thank you very much.